This is Business Incorporated coming to you live from Lagos, Nigeria. Thank you for joining us. I'm Chimeze Obi Iwago. On the show today, the Organization of Petroleum Exporting Countries reassures that the global oil market will be rebalanced in 2018. African Development Bank to decide the fate of a $296 million financing package for Côte d'Ivoire's purchase of new Airbus planes. Plus, first global funding pact launched to secure indigenous land rights. We get started now with the markets. And here in Africa, in South Africa precisely, the market continued yesterday's positive trading, looking up 0.42% at intraday. However, the Nigerian market and Egypt were in the red at intraday. Now, Egypt's central bank plans to raise the required reserve ratio on local currency deposits to 14% from 10% for domestic banks, effective October. In Kenya, the market closed up 0.57% on Tuesday, and Kenya private sector activity shrank to 40.9 in September, at the fastest rate in at least 3 years, on concerns over political uncertainty, a drought, and a credit squeeze due to a cap on commercial lending rates. In the Middle East, the banking sector helped the Saudi Arabian stock index in today's trading activities, but shares of a Saudi insurer, MetGulf, were knocked lower after the financial regulator issued it with a warning. The Riyadh index was up 0.48% at intraday, with the main support coming from the banking sector. National Commercial Bank was up 0.8%. Mediterranean and Gulf Cooperative Insurance, that's MetGulf, slumped 4.1% in relatively active trade after saying it had received a warning from the central bank, which told the company to improve its capital adequacy ratio by December 31 or be suspended from issuing new insurance policies. In Qatar, the index lost 1.59% to a fresh 5-year intraday low. Commodity-related stocks were some of the worst performers. Oil and gas drilling service provider Gulf International Services lost 2.5%. Abu Dhabi's index dropped 0.17%, weighed down by the banking sector. The largest lender, First Abu Dhabi Bank, was down 1%. And the Dubai index was up 0.80%. In Europe, equities turned lower in early trade as investors kept a close eye on events in Catalonia and digested new data releases. For details, let's cross over to Frankfurt and talk to my colleague there, Ulrich Bartz. Good afternoon, Ulrich. Good to have you back on the program. I hope you were well rested yesterday when you took a break. Now, Ulrich, the Catalonia constitutional crisis is still dogging the markets. How much longer will this crisis last, and the estimated total impact on Spain economy and the markets in general?
Well, I think the crisis is just beginning to gain steam. The parliament and the government in Catalonia are setting a date for parliamentary debate and decision-making on an independence vote. And there's a statement expected tonight by the Catalonian government. So it's not withdrawing, and as long as Catalonia is forging ahead, the Madrid government will have to be forced to react in some way. So the crisis is ongoing, and it looks like it's going to be gaining in size. We don't want to cry about anything before it happens yet, but it doesn't look good. And it is affecting the markets. The DAX here in Germany, for example, began the day with a record high. I think you can see the nudge upwards at the beginning of trading. The DAX almost hitting 13,000 points for the first time in its history, not far away from it, and even the attempt marking a new record high. But then Catalonia, one of the points, giving traders some reason for pause here and dampening the spirit in the market. The situation looks much more clear and much more negative in Madrid itself. The IBEX 35, which is the Spanish DAX, the Spanish FTSE, if you will, that's going down by over 2%, about 2.5%. And major banks are especially hard hit, banks that are located in Barcelona with their headquarters, like Banco de Sabadell or CaixaBank. They're going down by 6 to 7%. And the Spanish economics minister, Luis de Guindos, he sees himself forced to reassure banks' customers that their money is safe in Catalan banks. And of course, whenever someone high up says reassurances like this to customers, then that makes customers think all the more about how safe their money really is if someone like the minister feels the need to reassure them.
All right, let's look at all the news coming out of Europe. Online giant retailer Amazon has been ordered by the EU to pay about $300 million over a legal tax advantage. Talk to us about this, and who else are the authorities likely to target?
Yeah, apparently Amazon was not taxed fairly in EU terms by the Luxembourg government. People putting Jean-Claude Juncker, the current EU Commission president, in connection with this because for a long time he was the head of that country's government. The market reacting quite, let's say moderately to this. The Amazon share is going down. A lot of people expected the tax bill to be higher than the 300 million euros that is now being named here. So people are taking this in their stride. Who's going to be targeted next? Well, one company that has already been targeted is Apple. And Ireland was asked by the EU Commission about a year ago to act on collecting 13 billion euros in taxes that the EU thought Apple had to pay in Ireland. Ireland is not of that opinion, and of course Apple isn't either. Now the EU Commission has said that it is taking Ireland to the EU's highest court in order to push through on the EU's demands. So we'll have to see whether there are indeed billions coming out of that in taxes for Apple. Now Apple has its coffers full of money, but that's still a lot by anyone's calculations. Facebook and Google parent Alphabet will also be targeted. One can almost be sure of that because France's Emmanuel Macron has named these companies also in his suggestion that the EU reconsider wholly the way big corporations are taxed in the EU.
Well, let's just hope that this wouldn't have major impact on the EU and US businesses. Now, let's look at the defense and gun company. Those stocks are really moving the needle on Wall Street in reaction to Las Vegas massacre.